What is it, everybody? This is your host Yasin Nizami. Welcome to my channel. And as I said, the purpose of these videos is to educate my audience about the real estate market in general, the trends, the lending terms, the economic situation, and the whole pandemic that has changed the overall economic landscape in Canada, that you guys can make an educated decision about your financial well-being. And all I need in return is your feedback in the comment section below so that I can improve my content going forward. And hit the like button if you like it, and subscribe to my channel so that you don't miss any future videos like this. All right, so today's topic is just to touch upon the recent, discussions going on with regards to the overall real estate market and the capital gain tax introduction. So I recently came across an interview from the head of capital markets at Scotiabank, Derek Holt, and just take a look at it. He is exactly talking about the same thing that I've been talking about in my previous videos, that the banks, the commercial banks and the Bank of Canada cannot just wash their hands of this, this whole, bloated, inflated, super inflated, real estate market, because it's their creation, it's their intended creation, not unintended, intended creation, by lowering the interest rate almost to zero and making lending so easy, right? And I think one of the reasons why I still hold responsible these banks and Bank of Canada is because they're seeing this market is going crazy for the last 6 months. Like, it's not something new, right? And they should re-evaluate their strategy and policy to kind of make some changes in a way. Should not send a message out to the public that, hey, the lending is super cheap, go and take advantage of it, right? That's the message right now they're sending out by saying that, hey, we're not going to increase the interest rate until 2023. That's a very bold statement. And as I've been saying that, they will definitely follow, ECB or Federal Bank of Reserve, because they always import these policies from these two major banks, right? So once, Fed increase the interest rate or ECB increase the interest rate, Bank of Canada will definitely do that. Second thing I'm going to touch upon is the discussion about the capital gain tax. Now, capital gain tax has been introduced since 1972, so it's not something new, and there has been a lot of changes since then on this, tax law. And right now, we have been given an exemption to not to pay capital gain tax on the proceed of the primary residence. The principal residence, it's the property that you live in, that's your shelter. And it's an exemption given to us by government that, because this is our shelter, so if we sell it and make any gains, we're not supposed to pay capital gains on the portion of the gains, right? A lot of people are saying and arguing that, hey, why is it that? Because just like any other equity, like stock, when you sell, you have to pay capital gain tax on the proceeds of it, right? So why real estate is different? And a lot of people are comparing between US and Canada, because in US, you're supposed to pay capital gain tax on the primary residence proceeds. I'm not comparing apples to apples, to be honest. If you look at, the US tax law, first of all, they give exemption to you up to $500,000 if you are a couple contributing into mortgage together. And if you are a single person, you are exempt up to $250,000. And this is the gain on the sale, right? So for example, you have a property that you sold for, $700,000, and you make, $200,000 profit since your previous purchase price. So you are exempt in the US because you did not hit that ceiling limit in order to pay the capital gain tax. And plus, there are other tax benefits available in the US. They allow you to deduct mortgage interest from your income tax. When you file your income tax at the end of the tax year, you're allowed to deduct the mortgage interest from it, right? So there are some tax benefits available to the residents in US which are not available, in Canada. So comparing US and Canada is comparing apples to orange, right? First of all, and there are a lot of consequences if this exemption is taken away by the government. For example, there are so many, further down the road, it's gonna do more damage than good. For example, a lot of people, especially the millennials and their parents, they have been putting a lot of equity in their primary residence, thinking that at some point they will retire, sell this property, and live off the cash. right? If we take this exemption of capital gain tax on the primary residence away, guess what? They will be screwed big time. So you are basically screwing up the retirement plans for the entire generation of the homeowners in Canada if we do that, right? So it's gonna do a lot of damage, to be honest. Number two, it's not gonna impact the affordability at all, because think about it, what's gonna happen? So let's say they introduce capital gain tax. The people who are about to sell their property, they will just, stop selling their plans. They will say, okay, I'm not gonna sell it because if I have to pay 25% of my gains, what's the point of selling it? Just, stay in our existing homes and renovate it, and then, we'll see later. So a lot of people will stuck in their homes. It will affect the movement of people, the mobility of people. A lot of people, move from one town to the another because of their jobs or some other economic and situations, and they take advantage of selling their property and buying something else elsewhere. They're not going to do that, because if they have to pay capital gain tax on the gains, then they will say, okay, fine, we will just live in this property, renovate it, and we'll see later. And the other case is they will basically rent out their primary residence and rent elsewhere if they have to move, for example. So the negative consequences are people will not sell their property, they will be stuck in their properties, which will eventually impact the supply side significantly, right? So there will be less homes available to be sold. You can see, right? It's basically do the damage more than do any good. And think about it, if they introduce capital gain tax, they have to change the taxation law, because just like US, you are allowed to deduct your mortgage interest from your income tax. Any expenses with regards to renovations or maintenance of the property, you are allowed to deduct that expense from your income tax. At one side, you will be allowed to deduct those expenses from your income tax, which will basically drop your income tax revenue for government, and then they will collect the capital gain tax on the other side. So the government will think, okay, if we are collecting more revenue from the capital gain tax, but on the other side we have to spend cycles and resources and money to change our taxation law, and we will have to reduce our income tax revenue. So is it worth doing it or not? I think these are the questions that the government has to think about it before they do anything, because they have to invite those consultants to come in and change the taxation law and implement it properly. So it's not that easy. It's not a cookie-cutter solution. They have to do a lot of due diligence, changing the taxation law, as well as making things proper before they introduce this law. Okay, so just wanted to tell you guys that this is not a simple solution. It has a lot of consequences, majority bad consequences further down the road for the overall economy, as well as the retirement plans that a lot of millennials and their parents have based upon the primary residence equity. So I don't think this is a good step. It will perhaps temporarily slow down the market, but in the long run it will do a lot of damages. In my opinion, the government should do more about the supply side of the issue. They have to solve why we have so low supply, then suppress the demand by introducing these taxation complex rules, because all you're doing is you're trying to suppress the demand, which shouldn't be done, because the demand is its market natural growth. You have to think about how you can meet that demand by opening up more avenues to build more houses, more construction. Make rules and regulations easy for the builders. We have a lot of green space restrictions, which doesn't allow builders to easily build the houses and get the permit. So maybe they should do more on that side rather than suppressing the demand. So anyway, that's all for today. By the way, this Thursday, tomorrow, I'm going to do a live session with one of the mortgage expert from RBC, just to take some questions from the first-time home buyers as well as the investors, and we'll talk about the market trends, mortgage interest rate, where is it going. So feel free to subscribe to my Instagram, because this is where I'm going to be live at 7 p.m. Eastern time tomorrow. It's going to be an hour session, so join, ask us live questions. We will be answering those questions live on Instagram, so don't miss that opportunity. And until my next video, take care. Bye now.